Good morning, traders. Sorry I'm running a bit late this morning. All right, so what are you expecting to see here this morning as the market opens? Well, we've got a gap down. A gap down is bearish. It is a sign of a continuation of the downtrend. The downtrend was also signaled yesterday with the spike down. So opening below the spike is the most bearish outcome, and the spike down is also bearish. So the first order of business for the market will be a counter auction to the upside to try to fill that gap. If they fill the gap, getting to yesterday's low, and they find resistance there and get continuation lower, that is the most bearish scenario. That is what is called a gap and go, which increases the odds that the market wants to go lower. Also, if they cannot fill that gap, if they leave that space unfilled, that again is a gap and go. The highest probability is continuation to the downside. Only if they fill the gap and then get continuation into yesterday's range. So if they push up into here, they're able to push back up into yesterday's range, and in particular get back above the base of that spike, so they can get above that 49.36 level. Only then is it possible that they get continuation higher. Otherwise, the higher probability is either sideways or lower. Okay, so the first order of business is the gap. Let's see how they handle this auction. Okay, so far this is a gap and go. That is bearish. The market tried to fill the gap. It could not. It is now getting continuation back through the opening price the opposite direction. So that is bearish to see as a gap and go. It doesn't mean they won't push back up and try to fill it again, but just that's the first signal of continuation to the downside. All right, well, I am bearish. I don't know, how far down they're going to be able to push it. There's support just below us at 38.77. And, that gap is like a magnet tugging on the market, wanting to get filled. So we may just pop down here, find some support, and then go fill it. But I am going to remain bearish today as long as we remain below yesterday's low. I will only be looking for short trades, not long trades. All right, so we're testing that overnight low now. If we push below the overnight low and come back up and then find resistance in here, or find resistance at the half back on a push back up, That would be bearish for continuation to the downside. Obviously, we can tell from the bad taper at the low that it is short-term traders trying to buy the exactness of that overnight low. That is weak hands. Weak hands looking for a gap fill. What happens if they don't get it? Gonna get squeezed. Good morning, RK Leon, Levi, Eldora, David Glass, JB, The Shaw, Jarvis, Philip, Cyrus, Rugsy, Bruno, welcome to you, Amir, Nor Auto Trader, Hustler Forever, T-Bay. Amir says, we getting more blood today? I mean, gap and go. You know, these markets they're getting beaten up. And so eventually, you know, you're going to get capitulation. Eventually, everybody who's going to get squeezed out of their stocks are going to get squeezed out of their stocks. But the momentum of the market, we can measure the momentum of the market in 3 different ways, okay? First off, yesterday, when we got cessation of one time framing, we didn't go rotational. We started selling off again right away. That's a sign of momentum to the downside. The market only needed the one balancing day before getting continuation lower. That is bearish, right? So we had that. Then we had the spike down yesterday at the end of the day. That is another signal the market is telling us, hey, here's some market-generated information. They want to go lower. It's a spike down. Opening below that spike is a confirmation of that. And then the gap as well. Not being able to fill the gap is another signal. The market's waving at you. Hey, hello, we want to go lower. So the momentum is certainly to the downside. How far down they can push it, I do not know. But the bears are definitely in control. All right, so we're pushing into some support from the previous, back when we were down at these levels before. Looking for a bounce back up to test the overnight low. If we get resistance there, it is bearish for another push lower. These support levels here, by the way, are not exact levels. That's just me eyeballing it, looking at looking at the charts from back when we were down here before. So just think of it as like a general area of support. Eldora, good to see you. Novice trader in the house. David Glass, welcome. Josh Lash, good morning. Mac Vins is here. Jack is back. Jeremy Jones. Jeremy says, I believe today or tomorrow we will pop up. Well, if they can find some support, head back up and fill that gap, and then get continuation higher, yeah, you could get a little bit of a bounce with some short covering. But not while the momentum is still to the downside. Pavel, good morning to you. FRM, good morning. TV, good to see you. Dean is in the house. Juan, welcome. Giles is back. Blue shirt, good to see you. Welcome back. MW, J Trader. Scooball, some people want to buy the dip there. Buying the dip has not been a great strategy, especially the last couple weeks. It is definitely a time to just go with whatever the momentum of the market is and to keep your trades very short term. Do not fall in love. Take your profits and look for the next entry. All right, so we're getting some support here. Let's test that overnight low for resistance. If not at the overnight low, at the halfback, which is currently at 83.92. Looks like we are getting some resistance here. All right, so they got through the overnight low. Next resistance is halfback at 91. If they pass back through the opening price, it would increase the odds they're trying to fill the gap, but I will remain bearish unless they can get into yesterday's range. All right, so it looks like the buyers are trying to get up there into that gap. Can they do it? Is there enough? Or will the sellers punch them right back down? Right in the nose. All right, looks like they're going for that gap fill. They're keeping the ticks above the zero line. They got back through the opening price. But are there sellers waiting right up here and right here? I believe there is. Jeremy Jones, I heard another profile trader yesterday talk about a naked VPOC on the NQ around 11,800 or 900. Well, yeah, that would have been tested by now. NQ also got a spike down, also got a gap down, also failed to fill the gap, which is bearish. So I would remain bearish on the Q as long as they remain below 11,940. Being prosperous, good morning. How did you see the support below? I just went and looked at the old chart back when we were here before. This is going to be very annoying when I say this, but like I'm just really good at it. Like I just from doing it over and over again, I've learned how to like look at these old profiles and kind of see the areas where, you know, we made a low, we made a high, we made, you know, volume node, and then it was the POC. It's like I just kind of, my eyeballs just kind of catch those areas. I nailed both the supports yesterday as well, almost to a tick. But you can't really teach that. You just got to stare at the profile for a long time and get used to recognizing those pivotal areas. You can also use volume profile if you've got the cumulative volume over there. I just can't load too much data on this software. It shuts it down. Okay, so passing back below the opening price to the downside means that that was a second failed gap fill, which is bearish. Going for round 3. These short-term buyers sure do love to get punished. How long ago? But just look at a daily chart. So we were in here back in March. Third attempt to fill the gap failed. Bearish. But of course, they're buying the overnight low again. Man, These short-term traders, they just don't learn. All right, attempt number 4 to fill the gap. They might be able to pull it off now, but I definitely think there's sellers waiting up there at yesterday's low. Just hungry to pounce. So at this point, if price works its way back below the overnight low, we'll probably get a little bit of a liquidation back down towards the lows, as there's going to be a lot of buyers in here that'll get squeezed. Still trying to defend that overnight low. Okay, so there goes that overnight low, increasing the odds that the market is going to trade lower. We've also just pulled the value area all the way down to the low of the day. So that's a little bit bearish to see. John Lash. Buyers over here like, I think I can. I think I can. Yeah, they haven't been squeezed yet. They haven't been liquidated. They're still trying. I think part of the problem, I was just thinking about this morning, like this is my first time ever being a trader during a legit bear market. And it's like, I feel like I'm learning how to trade again. Like you have to really shift your thinking. When the market is like this, it's very different than it has been for the last decade. So it's just that old buy the dip mentality. People are so used to, well, if we have a couple of bad days, we have to have a good day kind of mentality. And they don't understand it's the opposite. If you have one good day, you've one nice rotational day where you balance it off, you set yourself up for more bad days. The way you used to, the opposite direction. One bad day would set you up for a couple of good ones. It's the opposite now. The momentum is to the downside. It requires a very significant shift in thinking. Skewball, for the other side, the longer we stay there, the less fear in the market. Do you mean stay at lower prices? Yeah, I mean, eventually the fear runs out. Eventually that day will come where the last guy who's going to exit his stocks will do so. But we're not there yet. Oh, you're saying short term right now. Yeah, I mean, if they can continue to build support, they can make another attempt at the gap. They have not been liquidated yet. All right, it's fifth try a charm. Can they get back through that opening price? Can they fill that gap? All right, they got a little poor high. Repairing that should get them up to the gap fill. Looking for sellers right there at yesterday's low. And the base of the spike. So you say to yourself, but Charles, the price is going up. Isn't this bullish? Shouldn't we be bullish right now? The price is going up. Well, price is just an advertising mechanism. It's just there to get people to participate. Right now, price is going up to get as many people long as they possibly can. But what happens when those people start to take profits? Are there new buyers that want to take the market higher? Because if not, the rest of these buyers are going to get punished on the way down. So you can't get bullish unless we get up into yesterday's range, because it's just price trying to get people long so that it can take it right back away. I'm seeing that volume get thinner and thinner the higher they go. Daniel, how's the taper so far? Taper on the low is good. It's too early to make a call on the high. They're just testing that high right now. Okay, they're in yesterday's range. It's a little bit bullish, but there's still resistance. Okay, so now we watch the ticks. Do new buyers start to step in up here inside yesterday's range? Or do the sellers take over and start to push us back down below the zero line? Okay, we're getting some sellers. Getting back to the zero line will let us know if there are more sellers than buyers. If they can stay above zero, it's buyers. If they push below zero, it's sellers. There are more sellers than buyers. So this still counts as a gap and go. Who itches bearish? David V, this is a very helpful explanation. I wish more educators would help explain this form of the standpoint of what people are thinking as opposed to the simple patterns on the chart. The truth is, I don't think most people know. I mean, that's a lot of people don't like the signals they get on charts. They don't really understand why they're getting those signals. They just know that the signals work out or don't work out. Tons of people know if you fill a gap and can't get back inside that it's bearish, right? But maybe they don't really understand why that happens. You know, that the buyers who bought in down here, they either take profits up here and there's no new buyers, right? Or they get up in here and new buyers start to join the party. And they just don't know that. They just know that what a gap is, you know? So there you go. Once again, more sellers piling on. And think about the difference between the behaviors of the buyers and the sellers. The buyers were buying weakness over and over and over again, but the sellers had the patience to wait for the market to come back up to them. So probably the buyers are weaker hands traders and the sellers are stronger hands traders. David V, does that mean stronger hands have the ability to be patient and weaker hands impatient? That's the definition of strong and weak hands. Weak hands, they change their mind very, very quickly, whereas strong hands have made a decision of what they think the market is going to do, and they're in it. And they're either going to get stopped out or they're going to, go to wherever their take profit is. Whereas the short-term traders, they can change their mind. Look at how many times we bounced in here. They were like, I'm going to go long. Nope. Scared. I'll go long again. Nope. Scared. Long again. Scared. These sellers, it was like, boom, first chance, down. So it's two-sided trade at this point. Let's see if they can get back up in yesterday's range. You'll also be able to see it in the ticks. If this does turn around and start heading lower here, you'll see there's nothing but wicks on the ticks above the 0 line. There you go, just like that. And so you know, those sellers were just waiting for their chance. They're pumping the NQ. Yeah, I mean, it's basically the same thing as ES. They're testing yesterday's low. All right, well, I'm going to go back to neutral as they are back up in yesterday's range now. But they won't get me bullish unless they can get through that spike and then come back down and find some support inside yesterday's range. Otherwise, the odds still favor a rejection and a push lower. Okay, so the NQ pushed through that spike down from yesterday. So you can look for support when they come back down to yesterday's low. Through the spike on the ES as well. That is a little bit bullish to see. Now to test the support at yesterday's low. Skubal support, question mark? Well, let's see. Not quite yet. All right, so they don't have the buyers to get bullish just yet, but it is a little bit less bearish that they were able to get up into yesterday's range. So we may be looking at some sideways grind inside the overnight range here. The C period will tell the tale. If they can get the C period above the B period high, they can try to take the market higher, as that will be a signal of one time framing and momentum to the upside. But if we print that C period and keep it inside the initial balance, or break the A period low, that would be bearish, neutral to bearish. But once again, look at those ticks, man. Those sellers were just patiently waiting for their chance. They sold the resistance here and they sold the resistance here. So the buyers have not won the day just yet. All right, so now that we've printed that C period, we've left some single prints behind here in the B period. That increases the odds the market will head down to backfill those. And then look for support right there. And if they can get the C period above the B period high, so they can get it above 39.42, you can look for continuation to the upside, at the very least to the overnight high. And then if they can get through the overnight high, monitor for continuation higher from there. With that, I bid you all farewell, and I will see you here tomorrow morning. If you have not pushed that like button, I really would appreciate it. Those likes help out quite a bit. I know my my advice wasn't super helpful so far this morning, but wait to see how this plays out. The momentum is still to the downside. So I think it would be wise to wait for one time framing before you look for any kind of long trade. Happy trading, everyone. Bye-bye.